Imagine a leaf in front of you of a tree by a still stream. It takes 10 seconds to reach the surface, creating a ripple. Let us focus on this for the next few seconds. Hi, I'm HG and welcome to Old Human School. This channel I put together to help dreamers like you and me pursue our highest dream in the shortest possible way and the most efficient manner. Well, for the past few episodes, I've been sharing with you my spiritual dream, my career dream, my entrepreneurial dream, and last week it was about my fitness dream. So today, based on the questions and the people I talk to, I think that I want to share about my financial dream. If today you have a dream, a big dream, chances are this big dream do not pay you enough to take care of your everyday needs. You still have bills to pay, you still have a family to take care of, okay, you still have your day-to-day to take care of. So today, I feel that thinking and having a financial dream is important. You see, I did not achieve my financial dream or my financial freedom with the career or the entrepreneurial dream that I shared with you a few weeks ago. Yes, I got a breakthrough when I got a contract, when someone is willing to pay me 1 year's worth of salary in 1 month, but that didn't become the source of income that has sustained me for the past many years. My financial breakthrough came in March 2020. It was in the midst of the COVID crisis. You remember the stock market crash when people realized that this pandemic is here to stay. So the stock market crashed at that time. I wasn't an active investor. I have some investment here and there, but I never had a dream to reach my financial goal with investment. So when it crashed, the opportunity came. It was just a spiritual moment for me. You know, there was a tug in me saying that with the money I have, okay, that I have saved, that I have earned in my business, that I should go into the stock market because I knew that was just an emotional crash. Surely enough, after I put in a big sum of money, okay, into the stock market in that crash, for example, one of my stock, Tesla, went up 5 to 6 times that particular year. Bitcoin, another asset that I invest in, went up to $60,000. I started investing in Bitcoin when it was only $8,000. Well, that was the miracle that made me feel that I can be financially free as an investor. And why not I consider doing more investment than I invest time in doing my business? Because after all, my ultimate dream is to have enough time freedom to work on the non-profit that I have set up. So indeed, everyone knew that I made it because of this investment breakthrough. People ask me, do I still invest recently when I meet up with people? And it is, of course, a resounding yes. Today, I compile 3 keys how to invest that will generate life-changing outcome. So if you are ready, let's get to it. Okay, let's start with what is investing. Investing is basically having some money or a capital, and hopefully you put that capital into something that will generate a return. That means a higher value will come back to you upon what you put into to generate a return of investment. The second question is, why invest? Well, if you have a sum of money and you don't invest it, you will spend it. Okay, when you spend your money, it'll be gone. That's going to be a problem. If you don't spend it, you can save it, but The most important thing to do is you invest it. Okay, invest it. When you invest it, you put it into something that will generate interest that is higher and much higher than what the bank could give you. It could be in property, in cryptocurrency, in stock, in mutual funds. And this is something that I want to talk to you about today. Before you invest, I want to assume that you have the money to invest. Okay. If you still owe people money, you have credit card debts. Okay. I advise you not to invest, but to pay off your credit card debt and to whatever that money that you need to survive. Okay. That you pay it off. At this point, I just want to assume that you have the money to invest. If you don't have the money to invest, I encourage you to save. Save up enough so that you can invest. If not, work. I know a lot of young people who just fresh out of school, they just come out and they say that, oh, I want to invest, like Warren Buffett. I want to invest, like all these people that are seemingly making a lot of money through investment. But without the capital, without the initial amount, investment is not going to work for you, right? So I assume that you have saved up enough money that you can put that money to work. Okay, let's start in the first of the three key points that I have compiled for you. Okay, number one is be an entrepreneurial investor. What do I mean by that? I mean buy businesses, not stocks. So this is where I want to advocate not short-term investments. Don't go into trading. Okay, you are not trained to be a trader. People who trade are those people who do it as a profession. Okay, if you are not trained as a trader, it's not going to work for you. So what I'm recommending you to do is to invest and invest long term. And that means you are not buying a stock, okay, but you are buying into a business like the entrepreneur. Okay, so you become a business owner. Invest like you own the business means that there's no shortcut, right? What is the business all about? How is it done? How does the business make money? Who runs the business, right? And what is the future for the business? You have to study all these things. But do not worry. In today's world, there is no short of information. If you just need information, you go to the internet. In fact, there's even AI that can help you with research of all these companies. If you find doing this challenging because you are just a beginner, I realize that there is a fund called an S&P 500, which is a fund that comprises 500 of the best companies in America, all put into a fund managed by somebody that when you buy that fund, you buy into all 500 companies. The beauty about these 500 companies is that the moment these companies don't do well, they fall out of that 500, right? They get replaced by companies because the fund manager will do all that for you. Point number two, remove emotions out of the equations. We have to survive the FOMO and possible crash. You know, there are two aims in investment, in good investment, okay? We want to buy low, buy the company at a low price, and then we want to sell it when the price goes high. But the problem is two emotions that always get to us. FOMO, the fear of missing out. When the company's prices goes high, you get fearful that you miss out on it and you start buying when the price is high. And the second emotion, you are afraid to lose it all. When the price goes high, you are so afraid that you will crash, and then you start selling before the price reach its potential. Next is, when is the best time to buy? Well, nobody can time the market. Okay, the best price was perhaps last year. Okay, but this year, what is the best price? You have to just get into the game first. There is no best time to buy. If you find a company or a fund that you feel comfortable, that you want to buy the business and hold it for long term, it is important to just get into the game. Maybe start by investing a little first, right? And after you invest, the price is not going to go up in a straight line. Okay, it will go down. Like for example, my investment in Tesla, it went up 5 to 6 times. Okay, instantly. But that is rare, right? It doesn't happen a lot. Okay, but after that, do you know that since 2021, it fell 60%? So it's important for investors to remove the emotions out of the equations. So when the price of your company goes down, you just have to stay put and go down together with it. Take that time, okay, to study more about the company. Okay, maybe get yourself involved in personal development because it involves emotion and the calmness and the control of those emotions. Get into spiritual development. There are several videos that I've made about those matters. The best thing to do is really to do nothing with the stock, but start developing yourself as better business owners for these companies. So point number 2, really remove the emotions out of the equation. And finally, the third point I want to share with you is to build your portfolio through diversification from that one company or that one fund or that one asset that you want to buy, right? Move into studying the second, get into 5 or maybe eventually 10. I recommend getting between maybe 8 stocks or 8 funds or 8 assets to maybe at most 18 or 20. Develop what kind of business owner are you and in what business you want to get yourself into. It's okay to change business. You develop conviction as you go along. I love technology because I come from a technology background, right? So I love investing in technology. I remember getting myself into biotech, okay? And then I realized that I'm not good in biotech because I don't understand the industry. So I slowly developed my portfolio and my style of investment. As you develop your style, you find that you understand more about how the world works and how money moves around in this world. And it's such an enriching experience if you start building your portfolio, diversifying, and getting serious into the investment world. I've gone through several iterations about the type of investors that I want to be, that I can be. But when I started to read this one book that really changed my whole perspective about my style of investment, that got me into this sweet spot of really having a portfolio of businesses that I own, that I feel very comfortable with. And it's this book called 100 Beggars by Chris Mayer. I will put the link for that book in the description. You can go check it out. I have found my style. What about you? So spend your time developing your portfolio through diversifying your investments. So that's it. My 3 tips of how to invest to hopefully generate life-changing outcome for your dream. Okay, I want to end with a research by Fidelity, one of the biggest brokers in the world. Okay, they did a research on the accounts or the people that have accounts with them. They want to find out who are the best investors. And the shocking fact is the best investors are those people who are dead. They no longer access their account. The second best are those that have an account but they lost their password to it. So the worst performers are those who are actively tinkering their portfolio. So with that, I hope that I have inspired you to start your investing journey. First, be an entrepreneurial investor. Don't do short-term investing, go long-term. Second thing is to practice removing emotions out of the equations. Right? Be careful of the fear of missing out and the fear of losing it all. Trust the process and take time to study, go into personal development, spiritual development. The best thing to do is really to do nothing to just stop. And lastly, to build your portfolio through diversifying, learning more about economics, about how the world works, and be a richer person at the end of the day. So with that, dream big, start small, but start now. Remember to like, subscribe, and give us a comment. I'll see you again. Bye-bye.